Very good morning, all my students. Assalamualaikum warahmatullahi wabarakatuh. So today is part 2 of our lecture on this Islamic finance. First is on the banking. The second part now is on the Takaful and the product. So this is our topic 6 lah. So our learning objective for this topic, number 1, to explain nature and relationship between the policyholder and Takaful operator. Yeah. 2, categorize and explain types of family Takaful and the general product. Third, identify the salient features of regulatory of government requirement for the Takaful industry. So these are only 3 objectives you need to know for today's topic. Yeah. You clear this objective, you understand, that's good enough already for today's subject. Okay, what is this Takaful about? Takaful is Islamic name, and the normal name which you have been very familiar, insurance lah. Insurance in the conventional name, Takaful Islam name. But there are different features lah as we go along, yeah, that we need to compare and contrast as we did in our banking sector lah. Number 1, risk is inevitable part of life. Every day we take risk. Once you get out of the house, you are facing risk. Even in your house, you may face risk. You may fall, you may get burned, you may get cut. There's also risk there. Yeah? Not only outside your house. Yeah? So you must understand that we face risk in every day in our daily life. So risk relates to uncertain event in future that may result in a loss. Yeah? As I said, whatever happened to you, you're not certain. Suddenly you broke down your leg or something like that. Yeah. Then damage, and then the financial difficulty to death, accident, theft or disaster. So if this happen, do you have the money to take care of yourself? For example, you broke your arm, you got into an accident, you go to the hospital, you have enough money to pay for the medical or not? So this is where insurance or Takaful come to the picture. Yeah. People tend to plan for such risks by insuring themselves. So to make sure future risks that that will happen to you, and so that you are taken care, so you have to plan to insure yourself. Yeah? So in Sharia principles state that it is wrong to speculate on risk, and there should be no profit making from it, nor should there be enrichment at the expense of others. So in Sharia principle, you cannot do that. But in the commercial principle, that is their way of doing it. Yeah? So conventional insurance is based on speculation. An assessment of risk with insurance company gambling on the level of payout made in a year against the premiums they collect. The answer is to allow to surmount this apparent paradox has come to in the form of Takaful. Yeah? So as we go along, we can see the distinct between the what we're saying about the conventional insurance and the Takaful insurance. So Takaful has been practiced for centuries. Yeah, yes, in a concept that promote the principle of mutual contribution and mutual indemnity among policyholders. Well, this kind of practice has developed through ages. I mean, through the starting of Islam 1,400 years, but it's meant for domestic among the local community or local family. So it doesn't really have a proper structure that we are talking today. Yeah. So we want to make sure you don't get it wrong that this insurance Takaful only existed in this 20th century or this 21st century. No, it's already there since the birth of Islam. But they operate it different way because of the different environment during that particular time. Today we are living in different environment. Yeah? Takaful transforms from nature of insurance business and redefines the relationship between policyholder and Takaful operation. So we will learn that more in detail. Yeah. In this chapter, we'll consider the nature of Takaful, yeah, and the policy order and the Takaful operator, including the concept, distribution versus transfer of the loss. Yeah. So we'll go that in detail later. Defining the term Takaful. Takaful is obvious in the Arabic word, derived from the root from the Arabic. We mean that to guarantee. Yeah. To be more precise, it is derived from the verb takafala. Takafala is an Arabic word, meaning to mutually guarantee and protect one another, to protect each other. Therefore, literally, it simply means mutual help and mutual assistance. Before the recent introduction of Islamic insurance in Sudan, so the first Islamic takaful was introduced in Sudan. Sudan is a Muslim country like Malaysia lah, yeah, in 1979. The word takaful was used to reflect the meaning of solidarity among mutual responsibility in Muslim society. Takaful ijma. The Quranic term for mutual help and mutual assistance or cooperation, they call it ta'awun. Is in the Quran. So therefore, it is pertinent at this stage to construe Islamic insurance as takaful, ta'awun or mutual insurance as understanding, yeah, in the Muslim country. So the nature of the takaful and the relationship of the operator. So takaful is a concept of mutual contribution and mutual protection. That means we contribute. This contribution, if in the conventional, we call it premiums. We pay the premium, insurance premium. That's what they're talking about. So in Islamic, they call it contribution. They don't call it premium, so they call it contribution. Participants mutually contribute to mutually protect each other. So in simple terms, that if 2%, you are both of you say that, okay, I contribute 500 ringgit, you contribute 500 ringgit. If one of us made an incident, you take the 1,000 ringgit. Simple understanding. It's a simple concept. It's a basic concept lah. So the concept of akilah or blood money refers to the distribution of loss between the members group. As I said just now lah. I say 5 of you all contribute 100 ringgit. So 500. We go for picnic. So any one of us got injured, you take the money. Yeah, that 500 ringgit. So that simple concept of we call it Takaful or cooperation. Yeah? So distribution of loss versus transfer of loss. So the objective of Takaful is the distribution of loss among the participants. For example, like I said just now, 5%. Each of you contribute 100 ringgit. Go to a picnic. We go for a picnic. Suddenly, 2 of you fall, got injured. So the money from the 500 ringgit will be shared by the 2%. If one fall only, one got injured, then the 1% will get it. So if 3%, 3 will share it. Well, if 5 of you also got injured, then actually you will take back 100 ringgit lah. Simple as that only. Correct, you know? Yeah? But the important thing is always not all of you got into trouble. Maybe one of you got trouble. And this is the one who don't have the money to pay for the damages or whatever medicine they want to buy. So this way the money come about to help them to settle the problem, the injured that they got it. Takaful does not transfer the risk and loss to the other Takaful operator. On contrary, it distributes the risk and loss among the participants. So here we're not talking about 5% lah. We're talking about a company. A Takaful is a company now, which are now collecting your money. Just now, let's say we contribute 100 ringgit. Now, that 100 ringgit is kept with among yourself. But here, no, the money or the premium, or we call it here the contribution, you pay to the company, the operator of the company. We're talking now of a bigger people, bigger numbers of people. 100, 200,000, million people. We're not talking about 5 people anymore. I'm giving you 5 people as an example how this operates. But now you use this 5 kind of example to talking about 10,000, 20,000 or million people. Yeah? So Takaful is a scheme based on brotherhood. solidarity, mutual assistance, which provide for mutual benefit. It's correct or not, as I said now? If 5 of you went for a picnic and one of you got injured, so because of your friendship, solidarity, so all of you will give your money to one person who got injured to settle his problem, right? So, and the assistance to the participant in case they need, whereby the participant, that's already I mentioned just now, yeah? Features of Takaful, okay. Well, here you're talking about big company operating the Takaful for thousand or million of people. So there are 4 provisions there. Pure risk. Pure risk, there is the danger of financial loss incurred by a person in unforeseeable accident. Can be borne by a group of people. Any person has always sought to adopt the possible measure to meet the challenge. This is as it is now. For example, accident. Provision and compensation. For losses involved in pure risk under insurance cover is a modern method. The risk of management, usually if the loss are heavy, ruinous and opposite. For example, your house got burned. So the money that all you contribution or premium just now, will be used to help the other person to rebuild their house. Yeah. Participation. The practice of Takaful takes the form of mutual insurance, whereby participating by all members and are both insured and the insurers. That means it covers everybody who participate. If more than one, as I said, injured, then share the money with 2 of you. But here talking about big numbers, so it doesn't really affect 2 or 3 people, because we don't get house burned every day. We don't get accident every day. So there is plenty of money to help out those who get into trouble. Yeah. Distribution. In Takaful, losses are not calculated in advance, but are distributed when it is occur. So it's different from the conventional. Conventional, they will say that, okay, you break your arm, the insurance will pay you 5,000 ringgit. You hospitalized, you pay is 500 ringgit per day. So they calculate up front. But in Takaful, no. When thing happen, then they will see how much money they have, then they will pay. We have a good example in the college. It's about 10 years ago when I first started the college. One student riding a motorcycle with another student, one boy, another girl student riding a motorcycle. The motorcycle is borrowed from another party, from another friend. And the motorcycle, even without road tax and insurance. Just imagine, if you are big enough, you understand what I'm trying to say. Without license, he even don't have a license for riding a motorcycle. The motorcycle was borrowed, and that motorcycle have no road tax and insurance. And he was riding with another student, lady student, come to the college, and these 2 students ram behind of a big lorry. That means they going to whack the lorry from behind. Police case, no issue. First, you go and hit the behind of the lorry. Second, you have no license to ride the motorcycle. Third thing, this motorcycle, no road tax, no insurance. What can you claim? Nothing. Nothing. You can't claim anything from the lorry driver, lorry owner itself, or the lorry insurance. Neither from the motorcycle, because the motorcycle is not insured. So, but here we have buy insurance for all our student and staff. So we tell our Takaful operator, look, we have this situation, the accident, all kind of thing. They said no problem, because you insured him as a student. And the story that the student died, the male student died, and the female student broke his leg heavily. Yeah, fracture his leg heavily. So we went to our Takaful, which we bought for our student. Nothing with the lorry insurance or the motorcycle insurance. The lorry have insurance, but then because you whack behind of them, so he said it's not their mistake. The insurance don't pay, because not they the lorry head-on collision with you. So they get off. They don't need to pay. So our Takaful operator said, okay, look, we are calculating now how much money we have. I mean, they came here and give to the family of the boy, the deceased, the father, 12,000 ringgit. And then for this lady student, hospitalized for fracture, so the insurance cover for another 6,000 ringgit. So you see how benefit when things happen, the risk happen like this, then they covered the thing. If not, yeah, he died already. The father or mother won't get anything anyway. But at least he got some money to do for prayers or everything for the son. And this girl who was hospitalized, sure they have to come with own money because they have no insurance, nothing. But because we buy the insurance for the student, so the operator pay everything. This is good example, real example I'm giving you as a student, easy for you to understand. Okay? Then, okay, so we go a little bit deeper to see how the relationship between Takaful operator and the insured. You are the person we call it insured. The company who receive your contribution or the premiums, we call it the operator lah. So Takaful scheme, mutual protection among participants. We already explained. Whereas conventional insurance, insurer protect the insured, only the policy holders. Yeah. So there's a difference between these two things. Takaful contract, okay. So same like also conventional, you buy the insurance, you have to sign a contract. Yeah, because that is contractual obligation. When you get into accident, what they have to pay. It's only accident. If a conventional, they specify. Your accident paralyzed, they pay a certain amount of money. Your accident death, pay a certain money. But in Takaful, they don't specify the amount yet because that is uncertain. They will pay you according to when the time things happen. They will calculate as much as they have. They will help you. They're not going to cheat you because they are all run on Sharia compliance. Yeah? So wakalah, agency contract. So when you sign with the operator, the operator become your agency. So they call it agent. Tapi in Islam we call it wakalah. Is in another name agency. Here we call it wakalah contract lah. Yeah. And then you have this the other contract to sign. First you have to sign them as agent for you. When you give them the money, pay the premiums, or we call it here the contribution. A mudarabah contract. A profit sharing investment contract. So one thing, you sign with them as an agent to receive your money. Second thing, you have another contract signed with the operator to invest your money. Because when they collect the premium, everybody pay the contribution. Sorry, premium is the conventional lah. Here we got contribution. They collect millions of dollars of money. So they cannot be keeping the money because they're not going to make any profit. They also cannot give back anything with it. So we have to have a mudarabah contract, profit sharing with them. That we allow the operator to invest our money, and then to get the profit sharing. So that's why another contract you have to sign. And then you have to sign another contract. They call it tabaru contract. So the tabaru contract is for donation contract used in Takaful scheme for each of the payment that they're going to pay to you or to others. So this is the three contract you have to sign for them in the implementation of the Takaful policy that you buy from them. Maybe in conventional, I'm not very familiar. Maybe there's only one contract you sign with them, because the rest you don't have to bother what they do with the money. Here, no, you are part and parcel to tell them what to do with the money. They cannot simply use the money for investment here or there. It doesn't. Principal law pertaining to Takaful. So the premium or the contribution lah. Yeah? The premium is a sum of money paid by a policyholder as a consideration or compensation or indemnity from the insurance company. In the Takaful, the premium is better known as contribution. As I said just now, in Islam we call it Takaful, we call it contribution, not premium. Yeah? Based on a contract of donation, or we call it tabaru. Yeah? Because when they pay back to you, they call it as a donation to the party who get to risk, who benefit for the money. So the contract called donation. That's why they have another donation. What I'm trying to say, you will put just now 5 example of you, 5 people. Every contract 100. ringgit for picnic. So if one of you injured, so that 500 ringgit will give to the person who get injured, that considered as donation lah. This is what here the donation word come to the picture. So what happened after, if 5 of you just now, I give example, go for picnic, you collect 100 ringgit each. So one person injured, so the 500 ringgit give to the person. What that name mean? That name called donation. So that's why in Takaful, you have to sign the contract, because when they use that money to give to a party who get into situation, so that's where the donation arise. That means you already agreed to the operator to donate the money to that person. So that's where the donation contract come to the picture. Indemnity. Basically, both refer to the amount of money to be paid from the couple for the owner of the claim. Okay, it's very simple. So same like the normal insurance. Refer the amount of money that they receive lah, the donation they receive lah. Insurable interest. Insurable interest means that the existence of financial obligation related to life or physical. So insurable interest, it depends whether you accident on death, you accident, you get injured, or kind of thing. So same like the normal conventional insurance, it depends which part of you get injured, they will pay according to the amount to the part get injured. Okay. In summary for today's chapter, so what we have learned today, Takaful derived from the word takafala. What is the meaning? Mutually guarantee and protect one another, or mutual help and assistance. So we have already explained. If you still are not clear, please ask in the Mesharat. Number 2, Takaful follows the practice of Akilah. What is Akilah? Mutual help within the group. I give you a very good example, 5 person just now. Where all participating members of a family are both the protectors and the protected. So 5 of you are protectors and 5 of you also protected by the funds that you share the 100 ringgit. Simple explanation. I hope you can easily understand that one. In this model, there is no particular advantage of one member over another, and there is no profit making of it. So you see how just now the 5 person just now, so there's no profit among you. Just any one of you get injured, you get the donation of money. Maybe you ask a question, what happened if none of you got injured? All of you 5 go to the picnic, all 5 come back happily nothing. So that's where they come into this insurance. In that situation now, you return back each person 100 ringgit lah. But in Takaful, that's where they will give you the profit back to you. So in Takaful, the company will calculate, in this year, nobody got injured, no house got burned, nobody got killed, we don't pay anything. So this is the amount money we receive, 10 million contribution. Out of this 10 million contribution, we invest, we make 1 million. So we have now 11 million. So they will use that 1 million profit to give back equally to all who you are paid according to the contribution. Simple kan? If you can understand that one. So under Akilah, the loss of the individual member is divided among the related family members. So as it is now, if 5 of you, 1 of you lost, so the rest of you contribute lah kan to the person who get injured. So that's simply the meaning. Number 4, division of loss is what makes Takaful different. Division of loss is what makes Takaful, the Islam insurance, different to conventional insurance, where loss is transferred to a speculative adventure where profit is incentive. So basically in the conventional, they will use your money also for speculative purposes. So speculative, so if there's a loss in that investment, then you also carry the loss. Whereas in Islamic insurance, they cannot do any business with uncertainty or any interest, so they invest in some fixed kind of investment. Let's say they use 10 million to buy a building. The building rental 1 year they got 1 million. So the profit is 1 million. So they're fixed, right? They still have the building 10 million. They use the money from your contribution. So the 1 million now, the profit, they will deduct some of their expenses for the operation, but the rest all will be given back to you equally according to your contribution. Whereas in conventional, no, they may use your money for trading, for all kind of business, whether halal or haram, they don't care. If there's loss, there's loss. But is there profit? They give you the profit. But in Islam, no, they invest in fixed asset. That's why Islamic finance or Islamic banking, all business will rely on asset backing. If no asset backing, they won't do the investment. Yeah? Last one, the key features of Takaful are pure risk. Provision for the compensation, for the participation, and for distribution. I think quite clear. I already explained how it works just now. So there is a general concept of Takaful insurance, similar to the conventional insurance, but there are difference in there are some different contrasts here and there because of the Islamic way. Should be no interest, there should be no uncertainty, there should be no gambling, and there should be all on halal product. So you go back to the 4 tenets of Islam, which in the conventional insurance they don't have that. They do all kind of business. So that's for introduction for the Takaful insurance for this chapter. So we'll hope you understand, and if you don't, you want clear picture, please ask our lecturer and to get more detail. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.